Hello everyone, George DeSantis here with the look at the market for the week ending February 17th, 2017. Before we begin to look at charts, I would like to read the disclaimer as we often do. Uh, Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice because I am not an investment advisor. Remember, this video is made primarily for my family and many of my friends. So let's begin by looking at some charts. And here's the monthly chart of the S&P 500. First thing we notice is that this chart still looks very bullish. This is a bigger picture, and that's why we look at it. The Kalman filter crossed above the instantaneous trend line right here, and since then it continues to trend up above the instantaneous trend line. So the trend is up according to this MESA indicator. The parabolic, the yellow dot, it remains below the most recent bar, which is February's bar. And we should also notice that we are making new highs, and therefore we are closing. That little pip at the top of the bar tells us we are closing at the high for the month. So we're making new highs. MACD continues to trend up. It started from below the zero line, and if you remember reading anything in Alex Elder's book about MACD, you will know that he points out one of the best times to be buying the index or stock is when MACD begins to trend up from below the zero line. And that's exactly what happened here. Getting in at this time in the market was very powerful, very profitable if you did. Now, at the bottom of the chart, Elder Force, the 13-month in this case, because it's a monthly chart, continues to trend up. And so we still have a very bullish looking chart for the long term. Of course, the market doesn't keep going up forever, so at some point we're going to get a correction. And we'll take a look at that on the shorter term charts, the weekly and the monthly, and then I'll show you the three-line chart as we often do. So let's take a look at the weekly chart. Here's the weekly chart of the S&P 500, and number of things to note here. First thing we want to note is the relationship between the Kalman filter and the instantaneous trend line. And just as we saw with the monthly chart, once this Kalman filter crossed above the instantaneous trend line, we continue to have an uptrend, and that's where we are now. Now the parabolic is below the most recent bar, so there's no indication to reverse this, not yet anyway. We should notice that last week we gapped up. There's a gap between the close here and the open here. So last week was a very bullish bar. We gapped up. This trend is very stubborn. And I listened to Alex Elder's webinar. I attended the webinar last week on Wednesday. And he himself, he's perplexed by the strength of this market. He calls it an irrational market right now because he's expecting a correction somewhere along the line. This market has been trending up very strongly for a very long time, for quite a while. Now, we had a bearish divergence here, as I pointed out before. Market made a high, MACD made a high, market pulled back, MACD pulled back below the zero line, breaking the back of the bull supposedly, but the market made a higher high and MACD made a slightly lower high. So apparently this wasn't enough to really break the back of the bulls, because since then the bulls have rallied and taken this market even higher, quite a few points in fact. Now let's take a look at the percent R. Percent R, not much change here. It's really showing very strong momentum, above 80%. The RSI 12, which is a measure of the strength of the uptrend, or whether we have an uptrend or not. Since it bounced off 40%, continues to remain now over 60%. You don't get a bear market when this thing is over 60%. Not yet anyway. MACD, as I said before, is continuing to trend up now from above the zero line. And you can see the fast average above the slow average. So all in all, the weekly chart remains pretty bullish. So let's take a look at the daily chart of the S&P. Here's the daily chart of the S&P 500. On this chart, we can see that the Kalman filter is still above the instantaneous trend line. The yellow line is above the blue line. We have a nice uptrend here after a squeeze of the Bollinger Bands. They sort of come together a bit. And now we find that the S&P rode the upper band for a while, got a little exhausted here, and we had a pause, a doji or hammer. But then on Friday, we have a bullish engulfing candle. So this may be a sign that the market is running out of steam. The fact that we ran up, we actually gapped up a number of days, 2 days here, 3 days, 1, 2, 3, and then we paused at this level. So we'll wait to see if this is really the end of this major run up and how far back we will pull back or correct. But right now the market remains very bullish, and we can see that the parabolic is still below the most recent bar, so there's no indication to reverse this uptrend yet. Now in the middle of the chart, Jerry Appel's sum of the rate of change indicator give us a buy signal here, but as I mentioned last week, it doesn't seem to work as well on the S&P as it does on the NASDAQ. We tend to get more whipsaws using it on the S&P than we do on the NASDAQ for reasons which I don't know. I don't understand. In any case, he designed it for the NASDAQ and found it, did his research with it there. Now MACD continues to trend up from below the zero line, is now above the zero line. And at the bottom of the chart, percent R is showing us that there is very strong momentum, because it's right at about 100% level. So let's take a look at something else, maybe the weekly chart of the NASDAQ. Okay, the weekly chart of the NASDAQ composite is also looking really strong. We had some gaps here. We at least had one gap here last week. We gapped up. We closed here, we opened here, so we have this gap. Now, we did have a bearish divergence of MACD, but just as we saw with the S&P, that bearish divergence didn't play itself out in a retracement of the NASDAQ here at all, nor did it do so with the S&P. Since then, look at MACD. MACD is trending up again, and this is one of the reasons I said Alex seems to be perplexed. He says it's a very rational market because he saw these divergences, and we still didn't get a response to the divergences. Now in the middle of the chart, you can see RSI 12, which is a very good indicator for the trend. Since it crossed back above 50 here, is really continuing to trend up. Very strong uptrend. We need to have more indications that this trend is over before we call it over. So let's take a look at the daily chart of the NASDAQ. Now here's a daily chart of the NASDAQ composite. And as we can see, we hit that 57.47 target we calculated from this ABCD triangle here. We did have that bearish divergence. You see that making new highs and MACD making lower highs here. And so it didn't play out as foretelling a decline in the market. Since then, MACD is trending up as the market is continuing to trend up. And on the right side of the screen here, we see a very bullish engulfing candle. Although we had a doji here, this candle completely engulfs the body of this one. So this is pretty bullish as well. Parabolic below the most recent bar, and of course Kalman filter above the instantaneous trend line. Nothing much to say besides that. This is very bullish. Jerry Appel's sum of the rate of change indicator give us gave us a buy signal here, and since then, of course, it's done this. The market has gone up significantly. So owning the Nasdaq when we get across above the 4% line and selling it when it drops below the 4% line has been a pretty good trade. Insofar as MACD is concerned, we saw that earlier, that trend up here, even though we had a bearish divergence, and Elder Force continues to trend up. So on all three time frames with these indices, the Nasdaq and the S&P, we have very bullish charts. Let's take a look at something. I thought we should take a look at the weekly chart of SSO, the ETF of the S&P, which I use to trade SSO, or the S&P if you wish. And right now we can see that it rests, so it found support at the 100% line and it's trending up as of last week. So this SSO chart is looking pretty strong too. No need to sell it here. Let's take a look at the chart we haven't looked at in a long time. This is the regression channel of the S&P 500 taken from my Best Choice software. Now you can see here that when the market is at that 10% line, this 10% line, it tends to trend up. When it hits that 90% line, it tends to pull back. Close to it tends to pull back. Okay. In fact, it pulled all the way back here. When it gets close to it, it tends to either go into a trading range or pull back a bit. So right now we're at 93%. It's quite possible we're going to pull back. We're going to get a retracement here. And how far back is the big question. No one knows the answer to that. But it's a very strong bull market, and we need to be aware of the fact that we are in overbought territory and look for those indicators that are going to indicate to us that the market is pulling back or retracing, okay, regression to the mean. So let's take a look at something else. So let's take a look at the stockcharts.com chart with the impulse bars from Alex Elder. We can see on the right side of the screen here on this weekly chart of the S&P is green. So what that tells us is that we are allowed to buy the market according to the weekly chart. Let's take a look at the daily chart. On the daily chart, it's blue. We can either buy or sell when it's blue. We cannot short, but we can buy or sell. When it's red, we can short. It gives us permission to short it. Now, Alex is saying that this market, I attend his workshop, his webinar, and he is of the opinion that this market is, quote, wildly irrational. Okay, because he's seeing this divergence here of MACD. He's seeing this divergence on the daily chart, and I believe on the weekly he's looking at some divergences as well. See, so that's his opinion, and I share it with you. And we wait to see now. If it pulls back at all, we can expect it to pull back between the 9, the green line, and the 30 weighted moving average. So somewhere between 2200 and 2300, we might get the market pulling back there if and when it does. And certainly at some point it's going to pull back a bit. So that's how the market looks. It's very bullish, but we have some caution flags up. Okay. Have a good weekend. We have some sadness in the family, but I'll put that in the email, and we'll talk to you next week. See you. Bye-bye.